Hello traders, Jeff with optionboxer.com, back again with another video. Today we're going to look at the different order types. I did a post on my website a few months ago, looks like back in February, and started to gain some traction on Google, and it looked like some information that I guess people out there are curious to inquire about, probably for their own trading. And I just didn't find any, when I Googled it myself, I didn't find any, one source that had kind of all the order types and all the information kind of in one list, other than if you go to this link here, the Thinkorswim Learning Archive, and it'll let you break down the different order types here, and you can go through there on your own and take a look. But essentially, it just didn't seem like there was any one-stop spot to find all the different information as it revolves around advanced orders and the different order types. So I created this post, and it looks like it was starting to get some views, and I thought it would be helpful to make this video so that you could take a look at all the different order types and kind of learn and see them in action, all in one spot. And I'll do my best to chapter up the video, so you can just click, if you're looking for information on a stop limit order, you can just click stop limit, and it'll take you to that point in the video, and you can see one initiated and kind of hear me discuss it as I do so. So I've got on demand pulled up. I'm just going to go ahead and reload this, and we'll look at Apple just because I know they're liquid. And it looks like I've got it pulled back up to January 5th, which is irrelevant. It shouldn't really matter. But we're just going to look at the different order types. So the first one we're going to look at, we'll just go down to the list, is a market order. So let's take a look here at a market order. So you'll come over here to the order box, and you'll click market. I don't know why there's a good till canceled on a market order if the market is open. A market order is going to fill immediately at whatever price is available. So in this instance, the ask price is $8.25, but there's no guarantee I'll get filled at $8.25. Typically, the broker does try to fill you at a better price. It tries not to go above it, but if it's a fast-moving market, it's just going to fill at whatever is available when your order comes up in the queue. So you just click market, and I never mess with the exchange. You'll confirm, make sure the information is correct, and then send it, and it will fill immediately. All right, so that's really all there is to a market order. Let's go ahead and take a look at the next one. A limit order, that's the most common order, I believe, at least it is for my own trading. And so if I wanted to enter this trade, if I was happy with $8.25, I could just leave it as limit and click confirm and send. But a lot of times what I'll do is I'll say, I don't want to get this until it's about $8.10. I feel like that's a more fair price. So I'll set a limit order, and I'll confirm it, and I'll send it. And then that way I don't have to sit there and wait for this to come down to $8.10. As soon as it does, my order will be triggered, and it will process. In the meantime, it'll sit here in the working order queue. You can look at that here in the kind of the order window or the order dialog box there, or you can also come up here and take a look at it on your monitor tab under activity and positions. You can see it sitting here, and I'll go ahead and leave it in there. We may get filled on that here momentarily. But that's really all there is to a limit order. You're just setting the price that you want to pay, and you're not going to accept a penny more for that. I guess the only thing I should say about limit orders is the broker won't fill you in that particular scenario. We entered that price we entered for that 132.50 call for $8.10. They won't fill you at $8.11. They will wait for it to get to $8.10 before they fill you. Otherwise, it will not be filled. Now, if it's a fast-moving market and it goes down to 8.05, you could get filled at less than that, because the dynamics behind a limit order is that it will fill at the price you set or better. So in this case, since we're buying a contract, it will fill at 8.10 or less. So we'll leave that one there, like I said, and we'll go ahead and take a look at the next order. So a stop order. A stop order, commonly a stop order, or really a stop limit order, a lot of times are referred to as stop loss orders. And so it's typically used as a closing order. I guess you could use it as an opening order, although I myself have never done so. But the way I close an order is I just come to my monitor tab, activity and positions. I click on the ticker of the contract or the item I want to sell, and then I click sell that contract, in this case the 132.50. I'll come over here to the stop order, and so the way you'll see it listed here is it says the market order. So you're going to set what is essentially a trigger price, And as soon as that trigger price is reached in the market, it's going to trigger a market order. So as soon as that trigger is hit, it's going to fill at whatever available price is there. So let's say I wanted to sell this for $8. That's my stop loss. I got into it for around, I don't know, $8.20, $8.25 or so. And if I lose $25, I want to be out, and I want to be out immediately. Please be mindful, though, that if you do enter a stop order and it's a fast-moving market, or the market opens up, it gaps down or something, it'll gap right through this, but it won't change anything because your trigger will still have been met. Let's say it opens up tomorrow at $7.20. Well, it would have flown past your stop order, and since you have it set as a stop order and not a stop limit order, it's going to fill at whatever price is available at that moment. So just be mindful of that. So you can go ahead and submit that order, make sure it looks good on the screen, and then it'll sit there in your working order queue. Again, you can view it here or on the monitor tab under working orders, and it'll show you what the mark is, which is the current price, and it'll show you the price that you've set as your trigger. All right, so moving right along, we'll take a look now at a stop limit order. Now, admittedly, this is what I use more than, in fact, I can't remember a time I've ever used just a stop order, although I'm sure there is a situation in which it may be necessary. But myself, I use stop limit orders, and so let's go ahead and create a closing order there. In fact, let's cancel this stop order so that we don't lose our position here. And again, I'm going to create a closing order and click stop limit here in the order type box, and it's the same exact thing. The only difference is you're going to set a trigger. So let's say I wanted to set my trigger at $8, and then I wanted my limit price to be $7.50 or better. So even if this gaps down to $7.20, it's not going to fill until it reaches a price that's $7.50, or in this case, since we're selling, $7.50 or greater. So it's going to trigger as soon as this contract is trading under $8, but it's not going to fill unless it can get you $7.50 or better. So again, you could set that as good till canceled. Typically, most people do. I know I myself typically set that as good till canceled. That way I can set it and walk away, and I don't have to sit there and monitor it and let it go. So if we submitted this order, come over here to the working order tab or working order screen, and you can see that the mark is 822. Our trigger or the stop price, oh, it looks like we got filled on our second Apple contract here. And you can see the mark is down to 807. So if it goes down another 7 cents, it's going to trigger this stop limit order, and then it'll probably be filled since it doesn't look like it's too quick, too fast moving. As soon as this $8 is hit, it'll probably fill almost immediately, since we have a little bit of a difference in the stop trigger price and the limit order. All right, so that's a stop limit order, and I'm going to go ahead and cancel that order so that it doesn't get filled on me. And then we'll go ahead and take a look at the next order type, which is a trailing stop order. Now, this is a kind of interesting, and I really like the idea of a trailing stop order, although if I'm just being completely open with you, I don't use it as much as I should. But let's go ahead and take a look. Okay, it doesn't look like it's going to let me do that on demand. So we're going to have to exit on demand, which is unfortunate because I wanted you to be able to see, and you can see I've got a number of orders in the queue there, so it's going to kind of jam up what we see. But regardless, let's say I had this call, this 135 call open, and let's say I was looking to sell it. Well, you can see there's a number of different order types here that weren't listed on demand, and in this case, we're going to look at a trail stop. Very similar to a stop loss order. You're going to set the trailing percentage, or you can set it plus or minus. You can stair step it. There's a number of ways. I think most people probably use the percentage, or probably the plus or minus, let's say 50 cents. And then it's going to fill at a market order. When I've used the trailing stop, the few times that I have, I just set the percentage, and unfortunately I can't show you this right now because obviously I don't have the position open. Let's see what I have open here. So let's say I wanted to set a trailing stop on IVZ. So I've got two shares here, and it works on options or shares, but this is just shares of stock in IVZ. So let's say I wanted to set a trail stop order. I would come over here. I like the percentage myself, so I would pick the percentage that I want. And let's just say I wanted to do 20%. Odds are that it won't. But for every dollar that this goes up, I guess what's unique about it is for every dollar that the underlying goes up, in this case 28.77, let's say it goes up to, or really every tick it goes up. So let's say it goes from 28.77 to 28.78. Obviously the 20% away from that price is going to be a little different. So the higher this thing ticks, it's going to continually move up your trailing stop. So let's go ahead and confirm and send this. Then we can come over here and look at the working order, and you can see the 20% trigger price noted by a TR. So right now the mark is 28.77. If the mark goes up to 29.77, it's going to maintain this 20% away from the mark, the current market price, and it's never going to go lower. So if it goes up to 32.77, this trailing stop is going to go up with it, and if it falls back down to 28, the trailing stop is going to stay where it was at its highest point. So that's kind of the something you need to notice there. So I tried canceling it. Maybe it did, maybe it didn't. I'm not sure. But regardless, that's a trailing stop. The one thing you also need to, or another thing you need to be aware of there, if I can get back to the proper screen, which I don't know what I'm clicking on, is if you set a trailing So if you set a trailing stop, remember it's going to fill it at a market price. So if it goes up, here in this case you've got it 10 cents away, it's going to keep that trailing stop loss incrementally at 10 cents below the current market price. And once that price falls down below the 10 cents, it's going to fill it at whatever available price there is. So if it's a fast moving market, you could get filled at a worse price than you're expecting. So most people do a trail stop limit, which is entered the exact same way. The only difference is now you're going to set the limit price, and be mindful that you set good till canceled as well. I should have said that on trail stop, but make sure you set it as good till canceled. That way it continually moves. Now 10 cents, that's a really tight trailing stop. You're probably going to get triggered almost immediately, so I would set it $1 or more away. Give yourself some room for that the price to move up or down, and then it'll stay with it as as the price goes higher, the trailing stop will incrementally go higher with it. And what's cool, or what I wanted to show you a second ago that I couldn't show you, is that here on the working order screen, it'll show you at what price. It'll show you the mark, and you can see where the if I did this trail stop limit, it'll show you where your current limit price is $1 away. So you can watch it, in real time as as the price goes higher. You can watch your trailing stop go higher along with it, and then of course if price falls and it falls past the amount that you have set as your trigger, then of course it will be filled and the position will be closed. Hopefully that wasn't too long-winded, and hopefully it made sense. But that's trail stop and trail stop limit. So let's go ahead and take a look at the next. So I've never used a market on close order, but I'm sure there are some day traders out there that probably prefer that order type. So let's go back. Well, actually I can't go back to on demand, I don't believe. Yeah, because it wasn't available there. So if I wanted to, if I was in this position, which I'm not, and and I wanted to sell it right before the close of the day, so market on close, it's going to fill at the last available price, probably about 3 o'clock. Excuse me. Probably about 3 o'clock, 3:30. I can't remember exactly what time, but well, it may vary wherever you're seeing this video. But for me, it's around 3 o'clock, and it's just going to fill you at the very last available market price. So if you were in this and you were expecting to get filled at a certain price, well, you could probably relieve yourself of that expectation, because it's going to fill at whatever price is available. And I can tell you the market moves pretty quick in the last hour of the day, and especially in the last 15 minutes. So a market on close order is kind of a dangerous order type. But if you have to be out of a position for whatever reason, then it's probably not a bad order to go with. Similar to the market on close is a limit on close, and that's going to signal to the broker that you have a set price that you want to be filled at. You would simply set your price, and it's going to fill you if that price is available just before the close. And so you would set that just today. I don't see any reason why you would want to go good till canceled, but I guess you could set that, and then it's going to fill you at that price prior to the close that day. All right, so now we get into kind of the fun stuff. Excuse me, the Thinkorswim advanced orders. Now, going through this list that we just went through really quickly, I've used a market order, I've used a limit order, I've used a stop limit order, I've used a trail stop limit order. I've never used the market on close or the limit on close. I'm usually okay to hold it overnight. But for those of you that need to be out of a position, these two may be a little friendlier for you. But hopefully I was able to answer any questions you may have had about them. Now the Thinkorswim advanced order types, I have used many of these, so we'll go through each of them. It's automatically set to single order, so if you were buying this, it's going to automatically populate this advanced order tab, which is down here to the lower left, or this advanced order box, to single order, and that's just you signaling to the broker that, hey, I'm just wanting to buy this contract or sell it, or whichever you're doing at that moment. And so we really don't need to discuss single order, because it's going to automatically fill that. Every order is a single order, whether it's a spread, a diagonal, whatever it is. It's just a single order. You're coupling these together and you're sending them to the market as one single order. So we don't need to really look at that. The blast all, you can see I put here not just a cool name. The blast all order type will submit up to 8 separate order instructions at one time. There we go. Duplicate the order so that you can set the different prices. Let's see, can I duplicate it again? Yeah, there we go. Okay, so it won't let you enter more than 4 legs on one option strategy, but you can enter, let's say I wanted to, and then you can come through here and you can change that to the 31, to the 24, to the 27, and so forth and so on. And then you can set your price for all of them, and you would simply select blast all, confirm, and send it on its way. So if you're wanting to enter a number of different orders all at once, just make sure you're selecting them individually, and you can see it'll let you put them all on the screen there. So I'm going to delete that because I don't want to blast all those orders, all those random orders, and we'll move to the next one. So blast all, kind of cool. Again, not something I've ever used. First triggers sequence, or first Trgs seq, I guess is how you would say that. Just a shorthand for first triggers the sequence. So let's say you wanted to sell a vertical, and so right now this vertical spread is 35 cents. Let's say you wanted to get filled at 60 cents. Well, first trigger sequence may be a decent idea if you wanted to enter a stop limit order. So then you would have your order here on the books for this call spread, and then as soon as that's triggered and entered and valid, then it would trigger your stop limit order to also go onto the books. So this is an order type I've used quite a bit. In fact, you'll see the one I use more often here in just a second. I'll discuss it. But first trigger sequence, so this is just an example. I'm sure there's a number of different ways you would want to use this particular advanced order type. But let's again, saying that you wanted to sell a call spread that's above the current market price. Well, obviously you're going to have to wait for it to get filled. It's not going to get filled immediately, but as soon as it does, because you may not be sitting in front of the screen when that happens, as soon as it fills, you want your stop limit order or your stop order, whichever one you choose, or your trail stop, or whichever, or your trail stop limit, whatever it may be. You would set the criteria for that, confirm and send it, and then that way, as soon as this credit spread is filled, your stop limit order will also be filled according to the criteria that you've set. So kind of a nice feature there. So you could use the first triggers all if you wanted to enter this, and then of course you could create the opposite order and enter your stop limit or your trail stop, whatever it may be. This is the one I use more than anything, is first triggers OCO. So let's just say I wanted to sell a vertical, which I do quite a bit. Let's say I want to set my price a little bit higher than the market price at 50 cents. I would do a first triggers OCO. I would create a duplicate, or I'm sorry, let's delete that. Sell a vertical. Nope, I want to delete all that. Sell a vertical. Then I'm going to create an opposite order. Then I'm going to create a second opposite order. Apologize, I want to create a duplicate order of that one. And so what I would do here, or what I typically do here, is I set a stop limit and then a limit. So if I'm filling this at 50 cents, I would want to set my stop limit at a price that I could tolerate the loss. So let's say I was willing to lose up to $40 on this trade, and I wanted that order to be triggered at 85 cents. And this is pretty much essentially what I do when I trade vertical spreads. And then I would set my limit here as kind of my profit order. And let's say I wanted to close that when it was, almost worthless at 10 cents for the spread. So basically what's happening here is, as soon as you send this first order, it's going to create an OCO, or what's called a bracket order. You can see I've got a number of bracket orders here denoted by this little symbol down in the, or this little chain link symbol on the left. And so as soon as this order is live, and as soon as it's filled at 50 cents, these two orders will now become live. But what's cool about the first triggers OCO, you can also do just a straight OCO order if you ever need to. I normally enter them all together, but what's cool about it is, so let's say that this thing gets filled and then these two orders become live. As soon as one of these two orders fills, the other one cancels. So that first triggers one cancels other is what OCO stands for. So really a helpful order type there that you may not be familiar with, but really makes things easy for those of us that can't sit in front of the screen all day. So we'll take a look at the next order type. Won't spend a lot of time on first triggers 2 one cancels other orders, or first triggers 3 one cancels other orders. I myself have never used those, but they are exactly like they sound. You would just simply click first triggers 2 OCOs, and you could set it up similar to what we did there. And this would be maybe useful if you had, let's say you were doing 10 of these spreads and you wanted to set up, create a duplicate order. You would set your first, let's say you wanted to sell 5 contracts, or you wanted to buy them back in this scenario, and you wanted to set your stop limit and your limit price. Let's say I wanted to buy the first ones back at 30 cents and I didn't want to risk more than 60 cents or so on my stop. And then you'd create another, OCO. And then maybe had different criteria. So there we go. And then that way, as soon as you trigger this first one, you're going to have 2 OCO orders there. And you know, once this one is live, then it'll wait for it to get to this nearer price. It'll fill 5 contracts, cancel the other one for that one, and then these will be, well, they'll all be live as soon as this one is triggered. But you would think as the market moves higher or lower, one of these would get filled, and then possibly your second stop loss wouldn't be triggered, and you may be able to get to this profit on the second 5, or vice versa, whichever one makes more sense. And I won't build the first triggers 3 OCO, but maybe if you had several different levels you wanted to close an order out, it would be valuable for you. I apologize. So probably the best way to use an OCO order would be if I already had an order on the books and I wanted to go ahead and create, let's say for IVZ again, I'd create a closing order. Let's do an OCO order. Let's duplicate this. And let's say this one would be my stop limit. I would enter my criteria for my stop limit. Let's say 25 and 24.95. This would be the price that I'm just like, okay, I've got to walk away. I've got to get out of there with my stop limit. And then my limit order would be my kind of my profit target. And I'd set that whatever price made sense to me at that moment. And then that way, as soon as you send the OCO order, it will be filled immediately. And then the last order type, and you can see I listed here, is a pair order type. And you can see I've been pretty open here. I don't have any idea what this order type is or what it does. You can see it's listed here. Should be exactly 2 orders in a pair group. Maybe that applies to Forex or possibly futures, which I don't trade all that much of. And so that may be what the pair order type is. I know in the currency pairs, there's you're pitting the US dollar versus the Japanese won or yen or whichever it is. Again, don't trade too much there. But maybe that's what it's in reference to. And if you know, I would be interested to hear what it is all about. I've never used it and don't foresee myself needing to use it anytime soon. But that's all the different order types. Hopefully I was able to go through those in short order and make some sense out of them. Hopefully I didn't talk in circles and completely confuse you. But if you have any questions, you can feel free to reach me at optionboxer.com. Thanks for watching. See you later.